discovered something about the markets that has allowed me to trade only 60 to 90 minutes in the morning to consistently find profitable trades every day before going to my full-time job. This is something that I've been teaching for a little while, and it hasn't just worked for me, it's worked for a ton of other people. And it stopped them from jumping from YouTube video to YouTube video and ended their years of potential struggle with trading. They finally found something that is consistent. And the whole idea is this is something that is repeatable every day. So you can show up to the markets, know exactly what you want to do, have a consistent plan to follow, and execute it when the strategy shows up. And then you can move on with your day. I actually made over $600 this morning with this exact strategy I see every day. And I've actually made a new addition to the strategy that increases the potential for the amount of trades you can take every day, which I will show after we go over a basic overview of how this strategy works. And then we'll dive into the exact trade I took this morning. I'll walk you through how I entered, where I put my stop loss, how I managed the trade, and then once it's going for a profit, how I exit and get out, maximizing the potential profit I could make. Now, I only trade using candlesticks and drawing tools, no indicators. And what this does is it allows you to simplify your trading, but allows you to also use this analysis on any time frame or any chart that you want. I specifically trade the S&P 500 futures, the NASDAQ futures, and oil futures. But if you want to trade this on a larger time frame than I do, or just on a different market, you can, because reading the candlesticks applies to any market. These patterns show up the same because you're reading the raw price movement asset you're looking at, and it tells you the correct story. And so for me, over time, what I've realized this does, it is just allows me to create a simplified picture of what's going in the market. I can easily see, okay, where are the major support zones and where are the major resistance zones, and then potential channels or trend lines that asset is trading in. And so all I do is I look for reversals off of those key areas because those are the simplest to look for. Again, trading's all about finding something that's repeatable. And so let me show you what is so repeatable about this market that you can execute consistently every day. And that is at about 30 minutes after the market opens, it likes to consistently reverse. Here's today. If we just go quickly to yesterday, here's about 8 o'clock as well. For me, the market opens at 7:30, and then at 8 o'clock, it generally kind of moves, has potential to slow down, and then it reverses. And so those are the trades I'm looking for consistently. And so going into today, the first thing that I always do is I actually like to look at a larger time frame chart than when I trade and look for those key areas. And so going into this morning, if I just kind of zoom to where the market opened, is the market opens up right here. And so what I'm looking at is, okay, we have some pretty clear trend lines that the market's kind of respecting. It's kind of in this condensing upwards channel. And so overnight, the market kind of started to sit here and make a couple tops, right? And so I'm looking at is once the market opens, is it gonna shoot up here and then reverse off of this level? And is that a move that I can profit from? And again, waiting for that timing to show up. That's the most powerful thing. And so from there, I go into often a 5-minute chart, but also a 1-minute chart. And so if we kind of again zoom back to where the market was open, it kind of opens up here, again, 7:30 my time is when it opens up, and then it kind of starts to shoot higher. And so even once it breaks out of this zone, this is that support level from that higher time frame. Once we kind of get to there, I'm gonna go through a kind of a 4-step checklist to see if it's a trade that I wanna jump in on. That's what I kind of do every day is I look for these levels. I look to see if it hits my 4-step checklist. And then I also try to look for, okay, does it show up with that timing? Is at 8 o'clock for me or 30 minutes after the market, is it going to set up this signal and potentially reverse? And so to show you what this is kind of like in real time, I want to walk you through the recording of this trade I took this morning so you can kind of get a better feel of what it's like to do this in real time. And it's not just talking about it hindsight. And so my step checklist is the first one is it coming up to that level. This is from a 15-minute chart. It's just off of these highs. I'm just waiting for it to punch up into this area, right? And then I want to see it start to slow down. And so it's okay if it breaks out of this level like this, because what often happens is I like to call it a failed breakout. You know, a lot of people, like breakout traders, they want to see something break the previous high, and then they're going to bet that it's going to go up because they think, okay, it's broken that resistance level, it's going to go up. And the reason why I kind of like to use zones in my resistance and support levels is because it's really rough on where something is going to reverse. You don't exactly know where that's going to happen. And so I like to give it a grain of salt of like, hey, this is the area I'm kind of looking, but it can, you know what? It can come up here a little bit and then reverse as well. And so this is what I look for, a potential fail breakout. And so the next thing is now this is looking at a 1 minute chart. That's what I like to generally enter in on. I sometimes use a 5 minute chart. And again, you can use this on a bigger time frame chart if you want to. But what I'm looking at is, you know, here 7:30 where the market opened, and it's kind of shot up here pretty quickly. And I drew a support trend line based off of that because I want to see where is the trend line? What is it doing? If you're looking for a reversal and betting that the market's going to go down here and making money off of that, you don't want to go against the trend, right? You often hear the trend is your friend. And in this case, I don't want to go against that either, right? And so I'm looking to say, okay, well, this uptrend right here, I think it's clearly broken once it's kind of done this. And so from that point, okay, the trend's broken. What I want to see now is a potential for it. I like to look for reversal patterns. And a lot of the time that is something like a double top. If this comes up here and then starts to reverse, I really like that as a signal. And the idea because that is it's made an attempt to go higher again. And then it's not able to break this new high before getting rejection. And this is a really good candlestick. I actually have a video where I talk all about candlestick patterns. I highly recommend checking it out. It'll go more in depth on why I really like this pattern. But the whole idea here is the market tried to keep going higher, and then boom, we have this massive big rejection bar. And now what I've recently started doing too is, well, I want to see how the second candle reacts. And so to show you what that means is basically the market came down over those candles, pulled back up, and then it's rejecting. And I like to put my order right below that, basically below this low, saying, okay, you know, if it really is going to break down there, boom, I want to get in because I think that's a really good confirmation of essentially this double top being confirmed as best as you can confirm anything in trading. And then from there, I enter in on a trade. You can see I put in a stop loss, a stop market order technically. And so it jumped in me on 8 contracts. And then I put my stop loss up here. And so I always like to put my stop loss above a key swing. I don't do it based on a certain size. I like to do it based on the price movement in the market because again, I'm getting into the trade because of the candlesticks and a logical reason. And so I want to get out based on a logical reason. And the logical reason for me is, hey, if we come up here and break this high, I want to get out at that point. And so you can see I actually moved my stop loss down here because I saw the market make a little double bottom here. And it had a big push up here. And quite honest, this morning, my overall thought with the market and my intuition was kind of saying, I think the overall is bullish. And so even though I'm betting that the market's gonna go down, I'm getting short based on that, I thought that we were more likely to go up. And so I still jumped in on this trade because the signal was so solid. And again, looking at that timing, it's 8 o'clock. It's 30 minutes after the market opens. That is my key timing of when the market is gonna potentially reverse. And so having all these signals show up, it was good enough to jump in the trade. I was still a little nervous, but in trading, you have to jump through that nervousness. And then from there, I moved this down to essentially break even after seeing this kind of pullback happen. And my thought was, okay, well, if it's gonna come down here and break and go up, I wanna get out because I'm overall leaning a little bullish on the market. But you can see clearly it held. And then from there, just to show you a couple targets and how the market works is think about it like this. So we have, in the big picture, I've reversed up here betting lower, right? And so the first couple targets would be, okay, the market's gonna give this move back up right here, basically to where the market opened, or it could come all the way down here. And so those are a couple targets you want to think about. And even looking on a 1 minute chart, you can see here's where the market opened. It had a nice move up, and we're gonna look for it to give that back up. And I think right about here is 3 times my risk reward. I like to go for a higher risk reward ratio, a positive one, because that's more likely gonna make you profitable in the long run. I'm only right 50% of the time with these, but because I go for 3 times my risk, I can lose and win about the same time, but still make money in the long run. That's the whole goal with trading, is find something that's repeatable like this at 8 a.m. and then go for something that gives you a positive risk reward ratio. It doesn't have to be 3 times your risk. You can do 2 times if that makes you more comfortable, but that's how you wanna approach trading. And then from there, just to kind of zoom this forward, because it took a little while to play out, but it also started to break lower. And so part of me thought about, okay, maybe I should get out at a limit order here, and I should kind of get out when it made this kind of big move lower. And so totally getting out down here at a limit order would have been totally fine, but I kind of put my stop loss order here. And then from there, it kind of had a bounce here and knocked me out at about $600, and I moved on with my day after trading for only 60 minutes this morning. I discovered something recently about my 30-minute reversal timing in the markets that instead allows you to look at a few key factors and know when it's not going to do that, and you can actually take a continuation trade. And so this is something that's repeatable every morning, of looking for the market to either reverse at a key level or break through a key level, and you can take trades on either direction. And so normally every morning I look for key levels and look for things to reverse. But instead, sometimes if we just zoom out here on a 5-minute chart of the NASDAQ, is when things are so bullish, it's more likely to continue breaking through resistance levels, and you don't want to be counter trend trading at that point. You want to be trying to buy the breakouts and get in on the pushes higher. And so to show you a real trade of this, normally I draw my levels off of a 15-minute chart. If we zoom out, you can see we are in a really strong uptrend right now. And so, any previous resistance level we've blown through, and even I can't even zoom so far back on a 15-minute chart. You have to zoom all the way out on a daily chart to see essentially this previous all-time high actually on the NASDAQ of where that level is, and so where we could potentially break out of. And so from there, going into a 5-minute chart, this is kind of what I was looking at this day. Is I was looking at, okay, we're coming up into this level, and then zooming in on a 1-minute chart, what that looks like is, again, looking for my 30-minute reversal timing. Market opens up at 7:30. We kind of started to push higher, and we come up into about 8 o'clock. We come up into this resistance zone and start to slow down. We kind of start to make a double top here, and it's not a crazy big double top. And so the reason why I didn't technically take a short here, because if you look at this, it kind of hits my normal checklist. We came up to a resistance zone, we broke this trend line, and we've made kind of a double top and a potential reversal bar right here as well. But the thing is, with trading, the most important thing always is not these little micro patterns that you look at on a smaller time frame chart when you're entering, it's the big picture. And the big picture is that this market is really bullish right now. Going back to that daily chart, is look at how this box is huge. And so you can see that the day did close up pushing the highs of this box, but right now when it's opening and we're looking for this reversal, it's right here, right? It's right at essentially the bottom of this box. Looking at a 5-minute chart, you can see that kind of it moves up here, and we're starting to just have a consolidation, a bull flag, as you might say. And so that's why the big picture is important. And the reason why is because that allows me to say, hey, I actually don't want to bet short here. I'm going to hold off and save my money. Maybe I could be wrong and it could reverse here and I'll miss out on a nice swing, but you have to go with your read. Otherwise, you're just kind of blindly following a plan and rules, and you have to go with the overall big picture. That's the most important part. That's the hard part about trading, is it is a little subjective. But going into this, that's what you have to kind of do sometimes. And so, the NASDAQ just kind of was chopping here, right? And so when it gets into that point, a lot of times what I want to see is a big bearish candlestick here. And what that does is when the market's chopping so much and just a big candle out of nowhere happens, a lot of people get FOMO. They'll jump in and it'll bait them. And so what I like to see is it kind of start to quickly reverse that. And so when that happens and it aligns up with your overall idea that we're gonna actually push higher, that is a very good signal to, I think, jump in long. And so I actually jumped in after that signal. I actually waited for one more little pullback here. Is it pushed higher, baited people, essentially, there's a tiny little box right here, right? And it broke the lows, essentially, breakout traders and previous old me that maybe wouldn't have seen these signals when I was kind of new to reversing, I would have got in short here because this looks like a nice bear breakout, right? But again, using that overall picture is I actually think this is gonna go up. And so we then got a couple of candles here where it kind of just sits here. And so going into the recording of this in real time again to show you is that's where I got long, is I jumped in right after basically this kind of pullback here. And then I put my stop loss below this low and I bet that the market was gonna go higher. This is nerve-wracking for me. It's kind of not the norm versus betting that the market's gonna go down. But when all those things are aligning and you have this kind of fake lower and this fake lower and you have that bigger picture trend that's really strong, that's where I like to jump in. You can take that 30-minute timing and say, okay, well, it's not working today because of a few factors and I can profit off of that in a different way. And so once it kind of breaks out up here, I moved my stop loss to break even because, if this just kind of pukes back down right here, the market's just in a really choppy state and you just want to get out at that point. The idea is that it's going to break out here and you're going to find some momentum and you're going to be able to capture a profitable trade. And so from here, once we start to break out, you can see it's, I'm making really good money off this trade and this move is happening really nicely and just one direction. And so when the market moves up so quickly like that, I like to trail up my stop loss and get out, when it starts to turn quickly because I want to maximize my profits. And so I jump out on, 2/3, 3/4 of my trade right there. And then what I do is I leave a little bit on with the idea that what this does is when you're trading, you're gonna have all these emotions in your mind of, well, what if it just keeps going higher and, I closed out all of my trades and I missed out, right? Or what if this is it and I should have got out here and it just reverses? And so I find scaling out a certain amount over time allows me to mentally deal with that. I can get out, 2/3, 3/4 of my trade, whatever makes sense at, 2 or 3 times my risk, or when kind of, a big tight move up like this has broken clearly right here. And then I can slowly manage the rest of the trade because it'll allow me to, get a little bit more if there is a little bit more in the trade. Sometimes the market can go 5, 10x my trades. Doesn't happen very often, but when it does, I like to be on that ride. And so from here, the market just kind of moves up pretty quick and I kind of try and trail up this a little bit more and get out. And I think, that trade closed up probably $900 or something. And it was a great trade. And so the same thing happened where, I was done by 9 o'clock, which was a little longer, but an hour and a half, 90 minutes, and I can move on with the day. And so if you want to learn more about this strategy, check out this playlist right here. It'll talk you through everything more about entering and managing these trades, finding the key support and resistance levels, and also talking about those candlestick patterns that are so important to finally entering in on the trade.